is Wednesday, the 5th of November 2008. This is Brian Shannon from Alpha Trends. We had a return of selling here today. I'm going to start out with the NASDAQ. As I talk about that most on my blog, I think I'm going to change the order around and start out each one of these each evening with a look at the trading in the Qs. So the NASDAQ 100 Trust was down $1.76 or 5.21% today. Yesterday we saw that the market was pushing past this level of resistance and looking like maybe it was going to head higher, but we had to, of course, keep an eye on this trend line and the location of the 5-day moving average. Earlier on today, around this time, I said it looks like we're heading for a test of that 5-day moving average, but the more important level of support would be found down here at about 32.5. Well, the 32.5 level also failed to hold this market up today as the sellers just came in basically right from the beginning. The market tried to stabilize a little bit, but it was still down on the day and closed basically right on the lows with a big increase in volume here at the end of the day. A lot of that volume actually came as the market rallied in here, but we did finish below that level, so obviously a negative session here. If we take a look at the hourly time frame, let's take a look at those Fibonacci levels again that I had shown you yesterday, that the market had made it up to a 38.2% retracement of the September 18th high down to the recent lows right here on the 24th of October. So that 38.2% retracement level was something important to keep an eye on, and a lot of times we want to just keep an eye on the areas that other people are looking at to see if there's evidence of perhaps a change in trend. On the daily time frame, we've still got a downtrend. I had a couple emails asking people, of people asking me, you said that this might be the beginning of a multi-month rally. Does that mean I can, it's safe to invest? We're still in a bear market. If I talk about a multi-month rally, what I mean is that our bias may be to the long side for the next several months, but there's going to be pullbacks obviously within any uptrend, and I don't think it's time to invest because we're clearly still in a bear market. There is nothing bullish about this weekly time frame. If they didn't scare you out down here, they're typically going to wear you out. And what we're seeing right now in the daily time frame with this 10-day moving average possibly about to cross up through that 20-day moving average is more of a neutral market here, and we're going to see volatility shrink further as this market basically wears participants out. So we're at a potential level where perhaps we'll see the buyers reemerge and try to hold them on a closing basis for the week above that 10 and 20-day moving average. But right now in the 10-minute time frame, the market obviously is broken here. We're back below that 5-day moving average. The 5-day moving average is flattened out. It is actually just starting to turn lower. What I think is a possible scenario here is that if we get some strength, that you want to basically have a bearish bias short term, unless the market can basically get back above this level here, about 33.25. That's really where that breakout occurred from. We had a failed move from that breakout, so we have to be alert that it could lead to a fast move lower. A lot of times they trap people up in this area, especially on an emotional move like we saw based on prior to the election there, and now a case of buy the rumors, sell the news. We've got a new president-elect, and basically that person's going to have to deal with a lot of problems here still in the economy and in the markets, and the trouble isn't over yet. So we remain in a bear market. We have rallies that we can trade. This was a real nice rally to trade. We saw this pattern of higher highs and higher lows interrupted here today, basically pretty early on, and the sellers came in and continued to pound this market lower. So the NASDAQ remains in a primary downtrend. There's the possibility that we could stabilize in here. So we've got a lot of mixed messages right now. You basically want to maintain a strong level of defense. We've got all these moving averages turning back lower again. So perhaps rallies up towards that 5-day moving average again are going to be met with sellers, and those will represent possible opportunities to sell short. But that 5-day moving average is flattening out. That's what I was talking about. So it looks like the sellers are regaining control of this market. Let's take a look at something real quick here just to see, since the market broke past this 30.25 level, what the VWAP has been for that period of time. For the period of time time basically from right here when we saw that late Friday afternoon rally. Let's pull. I'll pull this back actually a little bit further to where the real buying began. From the point where the buying began, right here on that Friday afternoon rally, we saw, or as Thursday, whatever day it was, I don't even remember. But the point is, from this point where we saw the strong rally materialize from, we've seen that the average price the Nasdaq 100 is traded at is about 32.5. So we're below that level, meaning that the average participant now, on a volume-adjusted basis, is losing money based on this most recent rally. So that's something that shifts the sentiment back a little bit again, and people are feeling maybe not so confident. I've been warning that the more that prices rise, your confidence should not be increasing, just the opposite. Your defense should be decreasing, looking at it and looking for evidence that the sellers are coming back, because we remain in a primary bear market, and with a declining 50-day moving average, rallies should be considered guilty till proven innocent, which means they're susceptible for big pullbacks, especially when they get as extended as this market here has. I'm going to do the S&P at the end. Gold was back down, basically gave up yesterday's gain, most of yesterday's gains. From the opening price, it's below that level, but it did gap higher yesterday. It's back below the declining 5-day moving average. Gold remains in a downtrend, as does oil. I was saying that on oil, perhaps we're going to see a little bit of a bounce in here, but if you want to trade the long side, you're probably better off looking for opportunities that are in an uptrend. And here's actually, that's the VWAP for this period of time, but what I was trying to draw in was that this level right in here, which is about that 56 to 56 and a quarter level I mentioned yesterday, I said that level needed to hold basically. It didn't today. Sellers came back in. If they don't scare you out, they'll typically wear you out. No reason to be involved, in my opinion, in oil. Financials were down as well. They lost 8.6% today. So we saw this market come back up to this level where we had seen prior important level of support. That market, that level has broken down, obviously, and we see that the market is right here at this 10 and 20-day moving average. On a 30-minute time frame, you can see that this level did hold as resistance. We broke this uptrend line. We're back below the declining 5-day moving average. I would look for potential resistance up near about 15.5 on any rallies, and perhaps an area where we could sell short again in here. Let's take a look at the Russell 2000. Russell 2000. This, as I said yesterday, seemed to be a little bit weaker than the rest of the market, and that was perhaps a reason to be a little bit concerned, something to keep in the back of our mind, not a reason to sell short. But this market had been the strongest moving higher, and now it appears as though perhaps we're seeing that this 5.2% decline today, right down though to the VWAP since this point right here where that rally materialized from. So it's holding right there. We've got to, in the 5-day moving average is still advancing a little bit. We got to be really cautious in here, basically, on the Russell 2000. Perhaps perhaps we're heading back even down towards this level. We remain in a bear market. Risks are large. We've got that pattern of higher highs and higher lows has been interrupted. We'd seen the trend line break, and we had seen yesterday we'd seen the trend line break. Today we saw a confirmation that this lower high led to a lower low in here. So now we've got a pattern of lower highs and lower lows, and you've got to be very, very careful. The semiconductors were down 1.2% today, right down here as well to the 10 and 20-day moving averages. We rallied on diminishing volume. Here we're seeing a little bit of selling on heavier volume in here. By the way, the double short semiconductor is this SSG, which is obviously higher priced at 121, but I find it to be a good trading vehicle. The 30-minute time frame. Let's take a look in here again at these Fibonacci levels that we were looking at. Would have to actually back it up to the September 18th higher on the hourly time frame. But that 38.2% retracement, that's as high as this market was able to rally, and then we saw that pattern of higher highs and higher lows interrupted. We've seen now that we've got a lower low in here and lower highs. A 5-day moving average is flattened out. You've got to be super careful in here. It's going to take a move probably back above 2075 before you can buy this market with any conviction, or we're just going to need more time, and I think that's more likely here. Let's finish it with the SMH, the spiders, the SPY rather, the spiders, S&P 500. We'd seen made it past that 99 level yesterday. Again, from failed moves often come fast moves. Let's see. 99 is going to have to be retaken as far as if the buyers are going to have any chance to save this market. It's going to have to get above 99 and hold. We remain in a primary downtrend, so I don't think that's likely for a bit here. Looks as though we need to have a little bit further selling in here. It broke the trend line. It broke the 5-day moving average, same as the other markets. We've got lower high, lower low. It's time to be very defensive again. Hopefully you cashed out of long positions that have been working well for you. A lot of those plays, First Solar, SPWR, is it D now? B maybe, SPWRB. They changed their symbol, but these things just got smashed today, the solar plays, and you got to just be very defensive.